Have you ever had cash flow issues in your business and thought about paying your staff superannuation late? In today's video, I'm going to show you how paying your superannuation late is going to cost you extra money, it's going to cost you extra time, and can damage your reputation as a quality business. So I'll start with two examples. So in the first example, we have a company paying tax at 25%. This company has a tax liability of $10,000 and it pays it on time. So when superannuation is paid on time, it's fully tax deductible. So that would save this business $2,500 in tax, which means their total out-of-pocket expense is going to be $7,500. Now, in the second example, we have the same facts, but the company pays a superannuation late. So when superannuation is paid past the due date, it loses the tax deductibility status, which means they miss out on that $2,500 tax benefit. So their out-of-pocket expense is $10,000, not $7,500 if they'd paid it on time. Now this company would then have to deal with the ATO, prepare and lodge SGC statements. They would have unhappy staff, which can be damaging to their reputation. Further to that, the ATO can apply penalties of up to 200%, which is a further $20,000. which would bring their total out-of-pocket expense to $30,000, which is 4 times the amount that they would pay if they had paid that superannuation on time. Now, not every business that makes a late superannuation payment gets stung with 200% penalties, but penalties of up to 100% are pretty common with businesses that are repeat offenders. So how do you then pay your superannuation on time? So the first step would be to budget for the cost of superannuation before you hire somebody, because paying superannuation is not an optional expense. So make sure that your business can afford it before you put somebody on. Secondly, I would think about reviewing your superannuation liability balance on a regular basis. This can be done by checking your balance sheet or your payroll software regularly, and then transfer some money out of your main trading account into a separate account so the money is there when the liability is due. Make sure you don't dip into that money for other expenses. I know it's very tempting and a lot of people do it, but be very rigid with this because it's a very costly mistake to dip into that money. Thirdly, I would suggest paying the superannuation well before the due date and keeping an eye out for bounce payments. We've seen instances where the clients have tried to do the right thing, but a couple of the payments have bounced due to having the incorrect staff details. And those bounce payments have been missed, which meant that they missed the due date, which meant the payments were late and they lost that deductibility, which is quite unfortunate when they've tried to do the right thing. So if you want to save money, you want to save time, and you want to save your reputation, make sure that you pay your superannuation liabilities on time and in full. Now, if you are having cash flow issues, feel free to reach out to one of our team members and book a quick 15-minute call. So we'll talk about your current situation, we'll talk about your goals, and we can talk about some of the next steps to take.